What are some of the worst stocks inside of the S&P 500 and how can this list actually be helpful? There are ways that you can make money and save money by knowing what stocks to avoid and how to make money on the downside. Let's go ahead and break it down. The way we're looking at this is taking the S&P 500. This is the largest 500 companies in the US and which ones have the worst year-to-date performance. That is from January 1 to today. How can this help you to become a better investor and perhaps make some money? Number one, if a company is on this list, there are three ways that you can look at it. You could say, hey, it's on this list, it is down by X amount, time to let it go. Okay, and you can stop losing money, hopefully, by letting one of these companies go if they happen to fall in your portfolio. Another way of looking at it is, depending on what your investing style is, you can say, oh, these companies are not going to go bankrupt because they're large, they're established. I've heard of these companies, many of them you have, and you can say, oh, let me pick this up as a discount. And in the long-term future, you might be able to make a ton of money. Then the third way is what is called an options trade, a put option trade, meaning that you are buying a put option, and the lower the stock goes, the more valuable the option becomes, and you can sell it for a profit. We will break all of these things down. But what are the stocks that we're talking about today? The first one is Moderna. Moderna so far is down 59% on the year. It is an unfortunate story for Moderna. It was one of those pandemic stocks. It was one that I did have concerns about back then. I had wondered, like, hey, once the pandemic is over, what's going to happen to this stock? We found out. Okay, we found out, and it's not particularly good. Again, you're down close to 60% at this point. It's really lost a lot of that momentum, and now they need to find what that next big thing is going to be. Personally, I don't know. Okay, I don't know what the next thing is going to be. I already have my favorite medical companies, McKesson being one of those, and I'm just kind of out of Moderna. It's not even on my watch list. But that's not to say that the company can't come back in the future. We have seen companies that were terrible one year become the next great thing the very next year. Meta did this, as well as Nvidia. They were down, I think Meta was down about 70% last year. Tesla was down significantly last year. This year, hey, there's one of the hottest stocks out there, right? So I can't say that any company on this list is going to do that, but I'm saying it has been done before. All right. The next one here is a little puzzling to me, is Estee Lauder. The stock symbol here is EL. They are down about 51%. Now there is a pretty significant reason as to why, but it's an established brand. They're in what many would call a duopoly, meaning it's just two companies in this space, Estee Lauder and Ulta Beauty. And it really ain't, it's just the two of y'all, kind of like Pepsi and Coke. And when it's only two, you primarily are going to be a winner in one way or another, but that's not the case so far. And one of the reasons is because of the demand in China has really taken a hit, and that is one of the reasons, if you just were to quickly glance on what's happening, is the biggest thing for them. Now you can argue that because they are a well-established brand, you know that the products are going to be good to solid year in and year out. That is only a matter of time for them to fix that issue. And if this China thing is just a blip on the radar and a one-time thing, then this could be one of those opportunities where you are buying a good company at a bad price, right? Or buying a great company at an even better price, depending on how you want to look at it. And it could be something where, hey, there's nothing wrong with the company. There's just this tiny thing that's going on, and once it's fixed, the company is going to take off again. You can take that viewpoint, and if you do, this might be one that you want to add to your watch list. I am not going to do that. One, because I already own Ulta Beauty, and then you're going to find out later this week whether I'm even going to continue to hold that stock. So stay tuned for that, but they are here at one of the bottom of the barrel companies so far in 2023. The next one here is, it's Enphase, man. Enphase is not great. Okay, so stock is down 70% so far this year, and things just haven't panned out the way that I expected them to, and I think others expected them to as well. So remember, there was a breakdown that we did on this company back in 2022, September, so more than a year now, and there are a few things here. Number one, this is why I always have that 6-month rule, because back then, and with any company, about 6 months, you would have made your money. You could have decided to get in or get out, or the stock would have started to fall, and you could have got out then, okay? That is why. It is both for good reasons to go ahead and get your money and things to pan out in your favor, but also to get out if things don't go in your favor. I've said the same thing about Square and PayPal, where using that 6-month rule got us out before things got significantly worse. But Enphase really caught the majority of people off guard. Now, I did say, you can go back and watch those videos inside our members only, as well as the public videos, that they were inconsistent, that they were quite volatile. We did talk about that and how their finances have changed. Well, I think the biggest issue here is the fact that we expected clean energy to do better than what it has. Clean energy across the board, and it's not just Enphase alone, has not done well. There are clean energy ETFs that are down 30 to 35% so far this year. Why? We don't know. Not enough people know why, not enough analysts know why. And because we had the infrastructure bill, you would think that you had the government on board in terms of passing laws and regulations, again, including the infrastructure bill, to build clean energy and move in that space. And with the electrification of cars and how cars have, that's become the standard, right? We saw how Rivian and everyone else, Ford, GM, had moved to the Tesla chargers to further grow our electric vehicle fleet as a nation. It's inevitable, right? We are moving to clean energy. You would think that Enphase would have benefited from that, and it just hasn't. And that's one of the reasons why I say you can do your research, you can do all the stuff you're supposed to do, and the market just disagree. And it might not be you. It might not be you or your fault. It's just bad luck in this case. I think that's what Enphase unfortunately runs into. Now, I did not buy Enphase. I'm not currently looking to buy Enphase, but this would be one where I would have on perhaps a, not necessarily a watch list, because I'm not going to be watching a company that's down 70%, but like a side list where it's like, hey, if a diamond in the rough list, like, hey, if things start to come back around, I might come back and look at this because we already started to do our research there. But Enphase, it's disappointing, man, because they don't deserve it. They don't deserve to be down 70%, but the numbers are currently the numbers. Now, to a company that should be on this list, and that is Southwest Airlines, down about 30%, which is probably the best number you're going to see here on this list. Southwest Airlines deserves to be here based on how they have performed as a company, not necessarily as a stock, really starting about a year ago. I don't know about y'all, but remember they had an entire fiasco during the holiday season where I would say it was like 90-something% of their flights were canceled. They gave out a whole bunch of credits, and I don't think they really recovered since. When you compare them to a Delta Airlines or American or JetBlue, the numbers for the most part are drastically different, and it's going to be a while before Southwest really kind of rectifies that entire situation. Now, I don't think Southwest is going bankrupt. I don't think Southwest is going to be a stock that you will never hear of again. At some point, I do think Southwest will be okay. This is perhaps, of all the companies here, perhaps outside of Estee Lauder, this is the one where I would be most confident in believing that this is that discount stock. This is the one that can make money in the near term future. Now, I am not going to bet my money on that, because again, if it's down that much, is a reason as to why. But there are some investors that do take that viewpoint, that do want to buy companies that have been beaten up. So if that's you, feel free to go ahead and do that. The next one is Charles Schwab, another company that I don't think deserves to be here, but they're down about 33% so far this year. They're one of the, I wouldn't say few finance companies that aren't doing well, because there are several, especially in the banking sector, that aren't doing all that great, but they seem to be an outlier in doing, one of the worst in this particular category. When you compare, especially to a lot of the credit card companies, which we have talked about before, they're doing okay for the most part. But Charles Schwab did recently merge or complete their merge with TD Ameritrade. They had to lay off about 2,000 employees, which is not a good thing, okay, especially from the employee perspective. However, when I'm looking at a lot of tech firms and other companies, when they do layoffs to become more profitable and the stock starts to rise. That has not been the case for Charles Schwab. And this is another company where I don't think it deserves to be on a list like this, where they're not doing so well. Another company here, and this one I would argue is also a bit puzzling to me, is Dollar General. Dollar General has been real bad. Like, I have been tracking Dollar General, or I set a notification for Dollar General way back during the pandemic when the stock was good. Okay, it is not anymore. Another reason why we had that 6 month to 12 month rule. We got Dollar General, took our profit and went home, right? But Dollar General is an interesting case because we're still dealing with inflation, okay? Yes, inflation has come down, but I don't know about y'all, but paying for stuff is more expensive and it's not fun. So we've had a scenario where people are trading out of not going to Target because Target's a bit more expensive and going to Walmart. Not going to Walmart, and you would think going to a Dollar General or a Dollar Tree. That has not been the case, and they have continued to lose significant sums of money. I mean, I get an alert about Dollar General, PayPal, and Square hitting a new 52-week low what feels like every single day. It felt like every single day for the majority of this year. That is what continued to pop up on my phone, how those three stocks hit a new 52-week low, which is the low within a year, or lowest point within a year. Do they deserve to be here? I don't know. I just would not, it's not something that would have come up on my bingo card. Now, I know that these are defensive stocks and stocks that are known to be more, recession ready. So when you think about recession, people start to talk about recessions. This is where people start to buy a Dollar General. People have been doing that this year. Now, we said months ago that I don't think that's going to be the case for 2023, but I wouldn't think that, if I had to pull a card that was going to be down by this percentage and fall really off of a map so incredibly quickly. Now, the next thing is this. You've got a list of some of the worst stocks, right? Your Modernas, your Dollar Generals, your Enphase, your Estee Lauders, and everything else. And you might not want to buy these companies. And honestly, I wouldn't blame you because I ain't buying these either, okay? There are ways to make money off of it. But I would argue that the easiest way to make money in the stock market is just by buying stocks that are doing well right now, okay? And if you want to know what stocks are doing well and one of the best stocks to check out right now, then you want to check out these videos right here.